Okay, welcome back after the breakout room activity, and let's talk about the answer here. So, Chimora Limited is authorized to issue 600,000. Oh, Kathleen, your question. Okay, I didn't understand yet, but now I'm going to be explaining that. Chimora Limited is authorized to issue 600,000 of 5% 10-year bond. So on December 31st, 2014, when the market interest rate is 6%, the company issued 500,000 worth of the bonds and received 462,808. So Chimora Limited amortizes bond discount by effective interest rate method. Okay, the method we are talking about here through amortization, we call this effective interest method. Okay, so don't just get confused here. The semi interest dates are 30th June and 31st of December. It means on 30th June you will pay cash, and since the payment is on 31st of December and 31st of December is in the financial year, so you can pay the cash. You cannot create liability. Okay, if it is 1st of January, then you create liability here. So your question, Kathleen, can you hear me?
Yes.
Okay, so this is a company who is authorized by law, maximum they can raise funds 600,000, okay, at 5%, but they raise only 500,000, right? So it means they have still capacity to issue more. How much? $100,000, right? So they issued $500,000. So interest payments are based on what company issued, not authorized to issue. Issues, so 500,000. So interest payment is based on 500,000. Kathleen, you understand now?
Understand now. So it's about the company. So for interest pay, okay, understand now.
Okay, right? Because that is the authority, how much they have, because company need to get approval from the board of directors, how much loan they can raise, right? So that is just for your extra information, that's it. Okay, so bond amortization is, you already given the value here, 462,808 and 500,000. The difference is called discount. So discount, you write it down, you make the amortization table here as well. So discount is 37192 and 462,808 is the value here. So how much is the interest payment? Interest payment is based on coupon. Coupon is 5%. 5 multiplied by 6 by 12, answer going to be 2.5. Fair, 2.5%. 2.5% of what? Bond face value. Bond face value is not 600,000, it is 500,000. Answer going to be 12,500, right? And interest expense is based on, because interest expense market rate is 6%. 6% multiplied by 6 by 12, answer going to be 3%. 3% based on what? The bond value or carrying value. Carrying value right now is 462,808. So you multiply by 3%, answer going to be 13,884. Right? So the difference between interest payment and interest expense is 1,384. So this is the value that you need to decrease from the balance. So you decrease from the balance. So if you less 1,384 from 37,192, answer going to be 35,808. And this amortized value you add in the carrying value. So answer going to be 464,192. And rest of the thing is just for your homework to find out whether I'm saying truth or not. So this is how you calculated that one. But the entries are going to be, so first, record the issuance when bond is issued. When bond is issued at a discount. So this is issues at discount, and this is the carrying value. How much, when you issue the bond, you receive cash. How much cash you receive? 46808. So cash received. What happened here? Where are we? Cash received. Where are we? Here. Cash received and how much you have to pay after the maturity date? 500,000. So bonds payable is 500,000 and the difference is called discount. Discount is our expense. Expense increase debit. So here debit side. So this is the entry of bond is issued at discount, right? And now the first interest payment is going to be on 30th of June, right? So interest payment, when there is a payment involved, it means the cash is going to be paid 12,500. Expense is like this, and the difference is your decrease in the value of expense, which is discount. So cash decrease, debit credit gonna be 12,500. Interest expense increase 13,884 debit, right? Discount decrease in expense gonna be on credited, and cash actually you paid 12,500, right guys? So it means your expense was like this, you paid, and this is your like savings. So this is how it is, but the name is like different. So we are amortizing the discount. So decrease in the value of discount mean increase in the value of discount means increase in expense. Decrease in the value of discount mean decrease in expense. Increase in expense debit, decrease in expense credit. So that's why this is the entry here. So on 30th of June and now on 31st of December, this is the same, but amount is now different. Amount going to be 1329, right? And there's a cash here. Why? Because payment is on the financial year 31st of December. If it's 1st of January next year, then here is going to be accounts payable or notes payable, right? It's going to be a liability here, payable. Okay, now partial payments. So what we are doing right now, because we didn't calculate the full amount, we already calculated the partial amounts here, right? So in the previous question, we talked about the partial payments, right? Only the bond is issued for 5 years, but we calculated only 1 year interest payments. So these are the partial years. So to look into the partial years, we will talk about this on our next class. We don't have much time right now. So everyone, you understand the concept of bond issued at par and bond issued at discount. So we just discussed now the three concept. What is bond? The bond issued at par. What is the accounting treatment? And what is the accounting treatment for bond issued at discount? For bond issued at premium, we will talk about in our coming class, right? So in our next class, we will be starting from here, partial period interest payments, and then the discount issued at premium, bond issued at premium. So until now, any question?
No, it's okay. Thank you, sir.
Kathleen?
I still have a question.
Yes, sure.
So when you do this schedule, do you always round up?
It makes sense to round up. It makes sense, but this is not only made in calculation and Excel sheets, so it's already rounded up. So don't worry about that. If you round up, if you don't round up, answer going to be the same. Any other question? Okay, if no question, remember we would be having the assignment, and in that assignment, I think, okay, in that assignment there's going to be a premium question, so I'm going to be skipping that. So there is no assignment for the next week. So I will be giving you assignment for this class and what we have learned, what we will learn about the honors equity. So they're going to be a mixture of 2 assignments for the next week, right? So if you still have any question, please do post us in our WeChat group. I would be happy to answer over there. right? So we are going to stop our discussion here until the bonds issued at premium. So for next week, see you next week. Until then, take care. Bye-bye.
Goodbye, sir. Take care too. See you next week.